Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's the 13th of February and today we have a slightly different format. Exciting, isn't it, Kev?
I just put a piece of cheese in my mouth when you asked me to speak.
Really? You're having cheese this early in the day? I mean, that's a bizarre one, that. Must admit. You're a bit of a continental breakfast fan, are you?
He never asked me to speak straight away, so I didn't expect it.
All right. Then what have we got on the agenda today? What are we going to be talking about?
Well, we're going to be talking about gold and copper, or copper and gold, whichever way you want to look at it. And just the effects that's going to have on the world and on its economy, because these are two. Actually, I'd even call copper a precious metal now, going forward with all the EVs requirements and basically the green electrification of the world, which is moving forward. You know, all of these things need copper, and many of these things also even intrinsically need gold as well. So it's an interesting time. I don't know who on earth we would get to talk about these things, but maybe you know some people.
Yeah, exactly. What we need is sort of four industry experts in this area. And maybe we can start with Professor Conroy. Maybe he can introduce himself.
Richard Conroy. I've been involved in natural resources for quite some time. A previous company of ours discovered the Galmoy zinc ore bodies, and that, together with other discoveries, led to Ireland becoming an international zinc or base metals province. Also involved with the discovery in Alaska of the Pogo gold deposit, which of course is a very major gold mine still in production. So we've been fortunate in our discoveries. But we think perhaps that our current discoveries are the greatest of them all, in that we've found, took a long time, but we've found a new gold district. And because people weren't looking at Ireland for gold, we've been able to tie up virtually the entire district. And we've now just brought in a major partner with very deep financial assets and considerable technical expertise, and yet we'll still be able to retain over 40%. We'll be looking at bringing in a first mine at a place called Clontibret, and then a successive series of mines over the coming years. And we now have the finance and the backup to do that. So we're in a very major position indeed. And we're looking forward very much to starting off with an intensive drilling program during the course of the coming year, probably running into tens of thousands of meters. And I think it's a good time to be in gold and indeed copper. And you've mentioned something of the attractions of copper at the moment. But the attractions of gold could be very major indeed over the coming years, because as well as the basic asset which gold is, the financial asset, and you've just mentioned about the difficulties that we see globally in financial terms, gold is going to be very much needed for that basic purpose of providing financial ballast to many, many countries. So there's going to be a major demand there. But of course, over and beyond that, you have the traditional demand in jewelry. And that's, if anything, picking up again, particularly in India, which is perhaps the center of gold jewelry development and manufacture and so on. But also gold is in actual fact very well suited for this green economy that you just mentioned. And I think perhaps many in the gold industry haven't as yet cottoned on to this. If you want to take an example of a mineral which is reusable, you certainly can't do better than look at gold. Some of the gold we're using today was probably discovered several hundred years ago. It is the epitome of reusability. As well as that, it is, of course, a very suitable an increasingly required metal for advanced technology of the sort which will be absolutely necessary as we proceed with the green economy. Gold has these tremendous properties of conductivity, and at the same time, it lasts. Even for such a thing as, shall we say, in a car, to be absolutely certain that on the occasion, which I hope you'll never need, but if you do need it, you want to be absolutely certain that your braking system will come on, the whole safety gamut. And if you've got gold there, it will. So there are all sorts of uses for gold in the coming new world economy, as well as the traditional gold situation in relation to the financial world and to the jewelry world. So I think we can look with a lot of excitement, a lot of interest in relation to gold in the coming years. I'd love to hear what my colleagues think, but certainly I believe we're looking forward to a very exciting time indeed in gold.
Well, Colin Bird, I've been on the AIM market and other markets. I started this corporate life in actually more in Toronto than in London. Mining engineer, probably early 40s. I moved out of sort of working for others, particularly Anglo-American, for 14 years, and went into the entrepreneurial side. In actual fact, no, that's not quite true. Went into the corporate side as working for Lion Mining Finance, which was putting deals together and doing the corporate work. So I learned a skill, or I learned something new, which could be attached to my base discipline, and went into an all new world of mining business. Quickly got tired of making other people quite a lot of money, and so decided to branch out on my own. I was there for the assemblage of First Quantum. I guess that was my first real corporate deal. I assisted Phil Pascal to put together First Quantum and an associated company, Balatar, I think it was called, International Balatar, and got them the money in Vancouver. And the rest is history. A very successful company, a very capable company. And Phil is still leading it in a very strong and effective way. I had other successes, of course, the Kiwara project in Zambia. I discovered that, and I think it was only 19 months to discover and to form the company and sell the company. 19 months for about $270 million. Typically, I operate in Southern Africa. I've tried Latin America with not a lot of success, feel very uncomfortable there. I tried Russia with only sort of playing around the edges. And again, not a place that I choose to be. And so Southern Africa is my stomping ground. And, the eastern and central part is where I like to be. Having said that, and I guess we'll be talking about it during this little debate we're having, I made a departure and went to Africa and to New South Wales, and working on the premise that location is important, politics are important, but if you see something real and you reckon you can do something with it but hasn't been done, grab it, because there's not too much gold on Regent Street. And I came across this project, which was the subject of a listing which didn't get away in Australia. It was in the Lachlan Fold. My reading said that the Lachlan Fold was starting to have a renaissance, and so I acquired a project called Bushranger. Being Extract, we acquired that for 1.25 million worth of shares, and started from a base, which is what dragged me there in the first place. 71 million tons of 4.44%, and not explored porphyry. So we went down there, really got stuck into the drilling, and now we sit where we've got something which is 3 kilometers long, got a conceptual open pit. The thing has grown enormously. We announced just before Christmas, I think it was, that we'd found yet another porphyry. The chemistry was so different, I feel confident to call it another porphyry because it looks to be more gold than copper. We're drilling as I stand. I think we've done about 35,000 meters. Professor Conroy said, you don't find these things without drilling the meters. We're moving towards revising the conceptual study. We're doing further geophysics, and we're drilling flat out and resource modeling with a view to approaching our. They're not preferred buyers. They're actually the buyers who have the first right of refusal on this project, and that's the Anglo-American Corporation. There's a clear and easy buyout formula of if we find 2 million tons of copper or make a decision to mine, they get first right of refusal. We kind of make a reverse offer to them, if you like. They don't like it, it goes to, and they still want their interest in the project, it goes to an independent. We establish a value on the Waldman method, which is not just about MPVs, it's about previous transactions of a similar size and the risk that early investors took. And we're hoping that's going to happen April, May. And of course, that company Extract is producing income from gold in Mozambique, income from copper in Zambia. And then across the board, I've got a few other companies that were all in gold and copper and have joint ventures with the likes of Sandfire, First Quantum. Also have an interest in zinc as outside gold, in zinc in Zambia and vanadium in Scandinavia. Particularly interested in vanadium as well because, all the talk is about generation, but we've got to be able to store this stuff, this electricity. Because when the light's out, tide stops, the wind stops blowing, so does electricity stop generating. And I envisage the new world being specific units very close to towns. I see towns and business being remote from one another. I see an old new style of living, I think, which probably a lot closer than any of us think when we see these futuristic programs. But the ability to store is going to be very important. So I'm in manganese and vanadium. And that's Colin Bird, entrepreneur, been in the business for a long time, enjoying it immensely and cannot do anything but concur with Professor Conroy and Phil and Kevin that this is just not a flash in the pan. This is a real, not even short term. This is going to last for a few years while we get the new order redress on the way the world conducts itself.
Yeah, thanks. My name's Shaun Day. I'm the Managing Director of Greatland Gold. My background is investment banking, but really for the last 20 years or more, I've been in the C-suite of mining companies, and they've been multi-billion, multi-mine operators, but in that more mid-cap zone. Originally with Straits Resources, that was ASX listed, had a wonderful portfolio of copper, gold, thermal coal and specialty metals such as tungsten and antimony, and the diversification of that business I think was its great strength. Then across to Sakari, which was a thermal coal miner across Asia, and more recently that Sakari was SGX listed up in Singapore and top 50 SGX there. And then after the takeover by PTT Group, I moved back to Australia with Northern Star. We grew that some 12-fold to become the second largest gold miner in Australia behind Newcrest. And really in each of those platforms of Straits, Sakari, Northern Star, we delivered somewhere between 5 and 12 times of invested capital. And really my experience has been growing companies to be multi-mine, multi-billion operators. And in fact, one of the acquisitions we made at Northern Star was the Pogo mine, which Richard referred to earlier, and I can attest to its tremendous grade and the size of that deposit. It's a tremendous asset sitting now in that Northern Star portfolio. So what I bring to Greatland is this background in operations and development. Greatland Gold, as listeners would be aware, we're London listed, but with an Australian focus, and our flagship asset being Havron. We're really confident that's a world-class asset. The tier 1 jurisdiction in Western Australia, and as Colin mentioned, those jurisdictional issues are just so significant. And then, of course, testament to the quality of Havron is our partner is global major Newcrest Mining. We're already punching in the decline there, and we've got mining expected to commence in 2023. But we're still very much in a growth phase with We are doing this expedited process to mining, punching into that southeast crescent, which is a very high, 6+ gram area of the ore body. We'll then put that through the existing milling infrastructure at Telfer, which is just 45 kilometres down the road, develop free cash flow and reinvest that in the mine. It's a gold copper deposit, and Greatland itself has a broader portfolio which extends across base metals, but particularly nickel and cobalt. And turning back to Havieron, it's a gold mine, but I think the best gold mines do have copper. It gives you this additional revenue stream, but equally diversification. And although I'm a huge believer in the application of gold in a modern economy, but equally copper is a particularly, indeed, I think the best exposure to that whole electrification EV economy. So we like to think our current suite, particularly if we can develop the nickel and cobalt actions, provides this lovely blend of gold together with copper, nickel and cobalt. So hopefully we're kind of a company for all seasons with that product mix.
My name's Martyn Churchhouse. I'm CEO of Carroll Mineral Resources. We're a resource developer and explorer based solely at the moment in Cyprus, focusing on copper and gold. I'm a geologist by training, started out on the tin mines in Cornwall as a day's pay, and like a lot of Cornish tin miners, ended up going to South Africa to work on the gold mines. Spent a number of years working for Anglo-American and Goldfields, a director of Goldfields in Namibia and then Goldfields Ghana, at which point I moved out into the junior sector and spent quite a lot of time in West Africa before moving back into working with the majors again, and spent a very interesting few years working for Lundin Mining as Director New Business Development, before going back into the junior sector again, which has sort of seen me end up in Cyprus right now. Our operations in Cyprus, we've got a strategic focus on brownfield sites. That was a deliberate policy of ours, targeting dumps and stockpiles and tailings. We also have got existing sort of new and hard rock resources that we're targeting as well. The brownfield strategy obviously implies that we're operating in an area where we have former producing mines. So, we know we've got the rock right, the right rocks, and we feel that sort of helps us sort of de-risk our exploration. We've got potentially a JV pending with Jubilee Metals. We're tapping into their particular expertise in the recovery of metals from residual waste materials in our dumps. We also have a current JV with one of Colin's companies, Present Resources, looking at sort of hard rock opportunities as well. We've been listed for 10 months now. We've made a number of quite significant acquisitions in country, which we consider to be probably the most prospective ground for near-term production. So, we're happy there, and it's a good working environment, decent jurisdiction. In terms of our sort of near-term objectives, we're planning to have our sort of maiden resource announced during Q1 this year, and we're busy developing the mine plan and submitting a mining application for the first of our sort of assets, which is called Truly. The Truly plant, we expect to extend so that it can also start processing a lot of smaller satellite high-grade deposits that we've also acquired in the same region. And then we are also now stepping out as the new season begins to look at probably our largest project, which is Calabasas, which again is dumps and hard rock. As you'd expect, we're also constantly looking for other acquisitions, both in Cyprus and in other jurisdictions that can add shareholder value. Listening to what the other guys have been saying about copper, And gold, that we also firmly believe that the green energy transition is a force now that it can't be stopped. People often ask me where I think it's going in terms of copper, and I think the challenge is that you try and decipher what's virtue signaling from politicians with regard to the targets and for reducing emissions and what's actually achievable. And even if you pair that back to something that is more close to reality, there's no doubt in our minds that the anticipated demand for copper is off the charts for alternative energy demand. We see a great future for copper. We have gold as a byproduct as well, of course. It's a slightly odd situation in Cyprus because when the industry sort of stopped in 1974 with the invasion, gold had little or no value. If you produce gold in concentrate, that became the property of the state, and they were paying $25 to $30 an ounce for the gold. So as a consequence, the entire industry or subsector in Cyprus stopped mining it, stopped assaying for it. And of course, we've now come back in and discovered all these gold credits that everybody had sort of forgotten about. In summary, we're a Cypriot-based copper gold, near-term low-cost producer. I think we're being as sustainable as we can in the sense that we're minimizing our footprint because we're working within brownfield sites on former producing mines. We're looking at reprocessing and cleaning up waste material, and also obviously targeting the residual hard rock resources that are a resource owned by Cyprus, and hopefully we can generate some value in terms of tax revenue and things as well on material that's been sitting in the ground and not doing anything meaningful for the last sort of 45 years.
Thanks for your introductions, guys. Now I'm going to go back in the same order, and if each one of you could ask some of the other people a question.
In a sense, I think I'd like, if you don't mind, to ask a question to all of them, because to me, and I'm not a geologist coming into even though I've been in the industry for quite a long time, one of the great attractions of the industry is the extraordinary variety and ability of the individuals involved in the industry, such as the other members of this panel today, and also the extraordinary technical challenges. There's all the difference in the world between an antimony deposit and a zinc deposit and a copper gold deposit. And yet in one way or another, we're involved right across the gambit. And then perhaps most important reason of all is the enormous potential, the very great rewards that can be made. On the other hand, the very great risks. I think it's reasonable to suggest that in exploration, the risks may be as much as 600 to 1 against. So in each of our companies, we have to look in relation to certainly the exploration aspect of the justification, because if the risks are very high, then the return, the reward must be comparable. It must be well worth your while spending the dollar in order to gain many, many dollars, or else you shouldn't be spending it in the first place. So I'd like to ask my colleagues, how do they see exploration in gold and copper going ahead over the next few years, bearing in mind this risk-reward ratio?
Shall I pipe up? I guess I'm always a pipe upper. A very good point. I actually believe, Richard, that the world is going to pay for maybe 30 or 40 years of underinvestment in the mining industry. Before the 2008 blow-up, I was of the opinion we were getting towards redress. But then that stopped everything. It actually stopped mines in the middle of being built, where project finances just withdrew, irrespective of the potential of the mine. And I don't think we really ever recovered. My opinion is that we sit in a position where the average, let's take copper, because, the argument is different for every metal, but specific for copper is the fact that, the average grade, and I'm sure everybody does know, the average grade of copper being worked in the world at the moment is around about 0.62. 15 years ago, it was 1.3. Imagine how the bar has gone down over that period. If one looks at Chile, where I think now we've been as high as 38, but I think it's 28%. New leader talking about nationalization, talking about increasing the royalties, not a massive incentive to go exploring. And even BHP get a severe bout of nausea when they've got to dig 600 meters to get at 0.42. And maybe 15 years later, the mine will be built. So I think this world really, Richard, gentlemen, I think has dug a great big hole for itself. And they're going to pay and pay dearly for it. And, I've been to several presentations later where people are asking me, well, do you think the copper price will go to $15,000? And I say, it doesn't matter. There's not enough of it. The world is in a serious, serious problem. So all the targets that these do-gooders and greater than thou guys who gathered together a few weeks ago and was going to clean the place up, in actual fact, they're just not living in a real world. You cannot invent copper ore bodies. And sadly, the period between 2006 and 2014, saw mines getting bigger and bigger, all the little companies getting swallowed up, mid-tier, one project listed companies being acquired. So I developed a little slogan. I always like to have a slogan because I think, you've got to be identified by where you're trying to go. And the day of the small miner is back. I preached copper in 2017, and now I'm preaching the day of the small miner is back. Big is not particularly beautiful and not necessarily beautiful. And we're looking now in the groups I'm working with for projects of 8 to 20 million tons of copper at 1.5% plus, which are worked frugally and can produce between 5 and 10,000 tons of copper. They will help to plug the problem, but not completely. And we've got major supply issues, as I said, throughout Latin America. Peru, they're trying to stop mines. Panama, there seems to be a little bit of pressure. Certain Chile is under pressure. So the supply side, time when it shouldn't be, is under enormous pressure. So what are we going to do about redressing the balance? What are we going to do about getting exploration increases? I don't know, Richard, because I fear for the planet. I really do fear for the planet because none of the majors have got an exploration department. They've got a new department, which is made up of 6 spreadsheet drivers and maybe 1 geologist. And they're risk averse. So they're waiting until, the last hole's gone down just to confirm the body. So there's got to be a massive thinking at corporate level in major mining corporations. There's got to be more money for what we're doing. And I guess the one benefit which has happened over the last few years, we seem to be better technically. We seem to be able to look through the earth. We seem to be able to make informed decisions before we drill. But then again, all of that means expense and money. So I firmly believe that the train left the station, Richard. The train had left the station. The recognition wasn't there. We miners, all of us CEOs around this meeting, we're never happy with our market cap. So that's nothing new. But I honestly think that the underlying fundamental, the reality of supply issues it's pretty, people are just waking up to it. In 24, it will be a nail-biting reality. So that's my little contribution to
Can I pick up on a point that Colin made there? That he's talking about the supply, and I mean, Phil, you've heard me, and Kevin have heard me. I've quoted this before on the roast, but you look at the World Bank statistics that says that mankind in the last 5,000 years has produced 550 million tons of copper metal. And if we're going to reach the targets that have been set, we need to produce the same amount of copper in the next 25 years. And that's just not tenable. It's simply not possible. And I have these debates with people. They say, There's lots of throwaway lines where they say, yeah, but, we recycle. And I actually I made the point of going and having a look the other day at the whole recycling issue for copper in particular. So if you look at, I think they call it end of life recycling. So you take your fridge to wherever you go, and you give them the old one and you buy a new one. Now, today, they can take roughly 40% of the copper that's in that fridge and they can recycle it. When you take your new fridge away with you, that new fridge has got about, its recycled content is about 20%. So clearly, the amount of scrap copper that is available simply can't meet demand. And if you look at another way, take a combustion engine. So let's say somebody says, right, we're now going to get rid of combustion engine cars and everybody's going to drive an electric vehicle. We can recycle those combustion engines. Fine. Take the combustion engine. You've got 20 kilos of copper. You've got your fully electric vehicle. It's got 60 kilos of copper. So even with the best will in the world, even if your intentions are good, you're still trying to make up ground that you simply, you can't do it. It's just not possible with the lead times for new production. And the second point I wanted to make is that, yes, exploration techniques have improved exponentially, and they continue to do so, and they will continue, and they'll keep getting better as our understanding grows. But also, technically things are improving in terms of mineral processing. I was looking the other day at another gravity gold technique, which seems really successful at taking out finer gold, for example. And in our case, with Jubilee, we're looking at flotation plants that can be used to treat both oxides and sulfides with a sort of a clever sulfidation process. Things like that make a huge difference. And I've been looking at some projects recently as well, where these projects haven't been looked at for a long time, or when they first looked at, it was by major companies that had a sole focus on sulfides. That's all they were interested in, just sulfides. So you look at the structure or morphology of an ore body, you think, this doesn't look right. This is an odd-looking shape. And then you realize that if you step back and look at the drilling that's been done, none of the oxides have been drilled in these deposits because they simply weren't interested. Because at the time when they had the mineralization, or they had the resource, it wasn't something that they could process successfully. So I think you can plug a little bit of the gap as well, potentially by going back to these projects and looking at the resources that have been left in the ground. But overall, I concur with what Colin says. I think we've got a huge gap between demand and supply, which is only going to be exacerbated by this clean energy transition.
We basically have a structural problem here, in my view, and that's definitely in copper. How it reflects to gold, I'm not sure. What do you think, Shaun?
Yeah, look, I think high prices create an incentive to undertake exploration, at least in the Australian environment. And I think, again, being a tier one jurisdiction, it is a preferred location for companies to undertake exploration. I think you saw a huge expansion in gold exploration in the past decade. And right now we have 10 to 12 week waiting times on assay results. Very hard to get exploration drill rigs. There is actually quite an exploration boom going on in Australia, which I think is very positive. The other example you see from history is changes in technology. When CIL, carbon enriched gold processing technology came in, that took a whole lot of low-grade ore bodies and made them economic, which completely shifted the paradigm of what you mine and the pathway to market. So I think what you're having now through a incremental increase in the metal complex of prices, coupled with this just tsunami of demand for these metals that's coming from the electrification kind of super cycle, if you will, you're going to have this incredible incentive to do exploration and for technology solutions. So I think those things will make deposits that we presently see as uneconomic, economic through this mixture of technology and price. But the good news for miners and indeed shareholders in miners is that is going to be achieved by high metal prices that encourage investment in exploration, that encourage investment in technology and allow satisfaction of the demand. And I think I saw today I think it was a UBS report which had there's now 11 million EVs on the roads. That is transformational from where it was 2 years ago. So this trend is real, is happening, and I think creates a terrific opportunity for a broad spectrum of metals.
Yeah, and as I think Colin alluded to, we're going to need to store this electricity somehow, some way. So all of those battery scenarios to put electric into those cars, to make sure that the grid is balanced, et cetera, are all going to take all of these base metals. It's, What do you think, Richard, about your answers? Give them score out of 10.
I think one would give a very high score on the answers. I think they're excellent, and at the same time, they also underline or underscore the technical reasons why there could be a great future ahead for the mining industry. In copper, obviously, there's going to be this enormous demand. It'll also apply in many other metals, and I think there's also going to be a great future for gold. So I think it's a very exciting time. And at the end of the day, of course, obviously the exercise is financial return, and I think we can look forward to that. And don't doubt there'll be challenges and difficulties, but I think the future is looking really, really very exciting.
Copper global stocks are down to 3 days consumption, apparently, which is just frightening when you think of it on that level. And then we've got Goldman Sachs commodities analysts saying that they're calling copper the new oil. Obviously, as you mentioned, the requirement for electric cars, and obviously power grids getting electricity from wind, solar, and hydro sources. So, I mean, what are your thoughts on the continued increase in price of copper moving to all-time highs? Do you think there's going to be some slowdown? I mean, I've heard that China's demand for copper and steel is actually decreasing because of their economy and the Evergrande scandal. Do you think that China alone's demand dropping is going to have an effect on the global price of copper?
I would have said that 5 years ago, but I wouldn't say it now, because the electrification of cars is a global thing. A slowdown in China without the new impetus would have been pretty serious for metals all round. But the need for the copper, I think, we are talking about the new industrial revolution. We're talking about a new way that mankind does things, and it is unstoppable, but it's also undoable. And I want to get back to my previous point that you can talk about the price of copper as much as you like, but it just isn't there. And so that there will be a natural slowdown in the progress. And so, and this is not the point of this discussion, but as a contrarian, one should be looking to invest money in coal, because, we're talking about a situation around this table. We're talking about, Bill Gates was on about it the other day. Robert Friedland is always on about it. It is not even doable. The demand and supply is so disconnected as this decade goes on, that we're facing real fundamental issues. So a slowdown in China is quite frankly neither here nor there. We know it will kick up again. We know that the Southeast Asia economies, there's going to be massive demand for copper in basic things, let alone electric cars. They're all going to want the fridges and the tellies and whatever, and they're going to want 2 tellies, and that's the nature of mankind. So the natural order will demand more and more of this metal. So to me, it's a real problem. It's you can talk about price as much as you like, but mankind has got to taper its needs because the demand is just not going to be met. And that's I keep getting back to that. We've missed a train. What should have happened in the late 90s didn't. What should have happened in the early 2000s didn't. And we're still not gearing up for a real copper recovery. But that's fine. Discover an ore body tomorrow, and even when I say the day of the small miner, even one of those mines is going to take you a couple of years to get into production. But if you're talking about a big porphyry, and I think about 60 or 70% of the world's new projects are porphyries, they take between 8 and 14 years to develop. There's a real situation today. And then again, I think, just back to your question, if one steps back, you'll see your 12s because of the London Metal Exchange inventories have fallen to zero. But then you'll see an oversupply because the ports are just basically the old system logistics are completely out of order. So don't be surprised to see 7,500 copper again. Don't be surprised to see 15,000 copper. And there's volatility for you in what is a base metal for life. Mankind, there's volatility for you. Look at the trend, Kevin. Look at the trend. The trend.
Yeah. I'm going to pick you up on the coal situation because the coal is a very interesting thing, both from thermal and metallurgical coal. Because the reality now is that thermal coal is now the devil in disguise. Basically, you should not use thermal coal because it's going to hurt our planet. The reality is, without it, we can't power the countries, especially China, especially India, et cetera, et cetera. But metallurgical coal is also another thing. We have to produce the steel to produce these EVs and these wind turbines and these solar plants, et cetera, et cetera. So we desperately need metallurgical coal as well. And there is a total disconnect there. I mean, I'm interested to hear what you think about that, Shaun, having been in the thermal coal industry there.
Yeah, thanks, Kevin. Look, the coal's actually very interesting in the context of your last question on China. Coal is now at all-time record highs. It's around $225 a tonne Newcastle. To put that in context, back in, say, 2012, its record average year was around $120 Newcastle. So it has gone through the roof at a time when most institutional funds will not invest in coal. And why has that happened? Well, there's a confluence of reasons, but you talked about the relevance of China before. China had this, I think, very successful hide and bide foreign policy, where really the West did everything it could to assist China's growth, even in the face of some trade practices and approaches to intellectual property that were inconsistent with normal Western trading mechanisms. Then, for whatever confluence of reason, they've moved to this wolf warrior status. And with that, they've weaponized trade. They've weaponized tourism. They've weaponized every aspect of their economy. And what that has done is change the way people think about global supply systems. So I think in terms of China remains a relevant economy, but I think what you're seeing is onshoring. You're seeing the selection of other jurisdictions with cheaper energy and employment. And so I think you're seeing the world trying to go back to more domestic supply chains. So you're going to see battery production in Europe, for instance, car manufacturing continuing in Europe and the same in the United States, rather than a China being the world's workshop. Now, that will take a decade to unwind, and that's a trend, but I think that over time reduces the relevance of China. Then what you saw China do was, I talked about the weaponizing trade. They wouldn't buy Australian coal for a period of time, ran their own coal stocks incredibly low, and then got into a position where they had to rapidly buy coal and now have held Australian coal prices. I think it's expected coal will now be the number one export for Australia in the last budget year, off what had been a series of declining years. So I think whenever governments try to interfere in the market, it's often an own goal. But in terms of the relevance of coal continues to be a very important part of the Chinese energy production. Same for India, same for a lot of Asia. Some companies like Colin are going to coal by wire, but those coal-fired power stations are still next door in a Cambodia or a Laos. So, ultimately, I think you're going to see by 2050 coal be only a very small part of the energy complex. I think that's probably the same for oil as well. But in the short term, it continues to be an important part. And if you do have a whole lot of electric cars on the road, you are going to need power. So although I'm a huge believer in renewable energy, particularly solar, which you see hugely being used in Australia, and we obviously have brilliant conditions for solar power, it's certainly sunny here. But you're going to see that trend, and I think, again, that trend is irreversible. But during this transition period, coal is incredibly important. I think one of the shames that you get is often not a global perspective on the environment. For instance, Chinese coal, 75% of the burn time is just removing the moisture. By contrast, Australian coals have been under pressure and heat for longer. They're a very dry, high-energy coal. Newcastle average is 6233 kilcals. It is a brilliant coal to burn to reduce the overall carbon emissions. 75% of that burn time of Chinese coal is just getting rid of moisture rather than creating energy. But what you're going to see is, I think, Australian coal being increasingly a smaller part of the global energy complex. You'll see more of your second-ranked coals coming from Indonesia and China and India being burnt, which means although coal will be less and less of the energy complex, you'll probably see its carbon footprint stay stubbornly high because we're burning lower quality coals. But that's kind of an interesting aspect of those. But energy is important. It drives the economy. It's going to drive the economy even more. So coal, positively or perhaps negatively, because I'm a huge believer in removing carbon and taking steps in that way. But unfortunately, I think you're going to see it continue to be burnt for the next 30 years through this transition phase.
Yeah. What do you think of the met coal situation? Because the metallurgical coal seems to be a complete disconnect now. We're talking $400 for high vol A and $345 for high vol B, short ton, I think, or not short ton, metric ton. So crazy prices compared to what it was, but there isn't enough.
Yeah, well, you should be no more negative on metallurgical coal than iron ore. They're two parts of the same steel making system. And you're using the carbon in the coal as part of your steel making process. So to some extent, coal all gets caught up in the same bucket, but there is a huge difference in what you're using, metallurgical coal as opposed to thermal coal for. Metallurgical coal's always been the rarer and more valuable of the two. But I think as steel production stays high, you're seeing such a little amount of exploration in coal that metallurgical coals are going to become rarer and rarer, and that's going to drive the price higher and higher. So I think, met coal is critical and needed. But you've certainly got a bit of a perfect storm there from a scarcity value point of view. But this is really, again, the same narrative we have across the metals complex, that if you want to move to an electrified economy, which I think is hugely positive, you can only do that with the metal and the energy base, which I think is hugely positive for a huge range of natural resources, including gold, copper, nickel, and others.
Let's move on to Martyn. Do you have a question for the panel?
Actually, yeah, no, I've got one for Shaun. Actually, as a sort of a mid-tier company now, do you find that brokers and analysts are sort of expecting you, when you're looking at new acquisitions and things, to be talking about it has to be more than 1 million, ounce gold deposit, or it has to be more than 500,000 ton copper deposit, or are you still driven by margin?
It's a great question, Martyn, and you actually see different gold companies seemingly take a different perspective to this. There are some gold companies that I follow which seem hugely focused on, large round numbers, 1 million or a 2 or 3 million ounce gold profile. For me, it's not about ounces. It's about being financially disciplined. And we're a company first, or a gold miner kind of second, so to speak. So I'm a huge believer in the quality of ounces, in actually generating high margin, high quality production, which generates free cash flow and returns for your shareholders. I'm not a believer in chasing ounces for ounces' sake. And even I think from a sustainability point of view, I think that's a better way. Moving less tons to make more money seems highly attractive. I think, unfortunately, gold is probably the one space where big is beautiful, and you do see that. But I believe in your investor relations, or at least how you position your company, it's about having your own conviction. And I think the right shareholder base will find you. And I think it's a very topical question, Martyn, but I think personally it's about optimising your production base, not just trying to make it as big as possible.
Okay, Shaun, have you got a question for the panel?
Yes, thanks, Kevin. Look, I just think opening up, we've spoken a lot on this about the electrification, how we see the role of gold, in that economy. And I think there's potentially two parts to that question. One part is its application in technology and recyclable and sustainability. But secondly, we've also only touched very briefly on this call around, in inflation. Currency is not necessarily being backed by, say, the gold standard or anything. Gold is an excellent hedge against inflation. How do we see, both from a financial markets, these years and years of quantitative easing since 2008, which I studied economics, and I'm pretty sure when I studied economics, if you printed money, you caused inflation and an increase in value in your currency, but that hasn't applied.
When I studied it as well, which was before you, I
think it was called hyperstagflation, wasn't it, back then?
And I think we had we had one paragraph on negative interest rates. So my entire economics course has been completely non-applicable to the last 20 years, but I guess that confluence of technology and capital markets just interested on people's view on the role of gold.
I think they're the very basic question that is being asked, and the two aspects to it, and they're both in the implications, they're both very favourable from the point of view of gold, in that the technological changes which are taking place at an ever-increasing rate, the commitments that governments have made in such matters, and indeed not just single governments, but global commitments that have now been made in relation to climate change and the steps that have to be taken. In that respect alone, there are considerable opportunities for gold because of the totally unique properties which gold possesses. So that in itself is very important for those of us who are producing or will be producing gold. But as well as that, as Chris was indicating, you have this extraordinary financial situation in which the world's largest economy is largely based on printing more and more amounts of money, increasing its debts to almost extraordinary heights, numbers of trillions of dollars of debt, and other, perhaps less important economies, but still of considerable substance, are also deeply in debt. And here again, gold is going to be in demand. It's the only ultimate answer to the sort of paper problems and debt problems that are arising globally. And already one sees some of the central banks beginning to take precautionary measures by buying gold. So I think the reality for gold, there's no just straight line upwards, but I think the likely trend is increasing demand and probably an increasing price at the same time.
It's no surprise, really, even though China are keeping it very close to the chest, that China have been accumulating gold now for a decade, I think. I mean, no gold mined in China is allowed out of the country, I think, is the scenario. So basically, we've got a situation where, and I mean, maybe I'll throw this question out and we can see what it is. I mean, 50 years ago, almost to the day, we all came off the gold standard, whether it be the US, the UK, South Africa, all of the ones that were on the gold standard, that at that time those currencies were important. And since then, we've basically gone on a system which is downward, the lowest interest rates possible and the highest amount of debt possible. I mean, the US in Bretton Woods terms now, which was the old gold standard, would be bankrupt. Completely bankrupt, and probably the UK as well. So how do we think that's all going to play out in the world? What do you think, Colin?
I am actually bamboozled. I'm probably the oldest in the gathering here. And so I can go back to, when you talk about shorting, my dad always told me that if you sell something you don't own, then you're going to go to jail. And now we sit in a stage where, we talk about gold being the ultimate safety, the safe haven. I'd like to believe that, but I never have been able to. I could never get my mind around that when push comes to shove, Armageddon, you go down to the petrol station with your gold bar, he stores a bit off the end and gives it you back. I could never, ever get to that ultimate store of value, if you like. I never minded gold much as a common denominator. I saw sense in that. And where, there's a relativity almost back to barter, I saw sense in that. And then along came the Bitcoin. And that's why I made the reference to shorting. So we've got something out in the wilderness there, which isn't attached to anything. Nobody can actually show you one. It's got no intrinsic reference point. And that is the new gold. And so when I say I'm bamboozled, I really mean it. I'm unable to grasp it. And at the same time, I'm unable to park it, because I've been very bullish, extremely bullish on this little discussion on the fortunes of the various metals. And I've gone as far as to talk about industrial revolutions and new revolution, as you spoke. I've actually made the comment in public gatherings that copper is the new oil. Wars were fought over oil, God forbid, might be fought over copper. So I find it difficult, as hopefully a reasonable thinking human being, to park the currency gold in its own little place and put it outside the general debate. There will be changes in that area, and I think I'm probably too old. I'm probably too thinking bound to actually be able to contemplate them. but there's something not quite right. And I think it's far too simplistic to say, oh, there's stacks of geopolitical problems out there. Inflation's round the corner. Because let's face it, we've got guys in Wall Street now who are going pale at the thought of 2% inflation. I remember, and everybody on this meeting does, I think, 15% mortgage rates. That's inflation. That's inflation. And so, you know, we are in a, and Shaun talked about his reading on economics, and mine is probably a lot less. But you can't park that debate in isolation and not put it into the total debate. And quite frankly, in the total debate, I'm not embarrassed to say, because, you know, I'm just a pure factist. I don't know where it'll fit, what it will happen, but I do know instinctively you cannot just draw a straight line against inflation and geopolitical risk, and therefore say gold's going to be $2,000 an ounce. Too simplistic, but can't give a counter argument, I'm afraid.
So do you think we'll ever see a reset of the monetary system in terms of cash? Because I mean, cash is getting less and less during the pandemic. You know, we only accept card payments. Do you think we're not only moving to a cashless society, but do you think we're also moving to a digital currency, and maybe that could be fractionally backed by gold, or a fractional gold reserve in the form of that digital currency? I mean, China's already talking about the digital yuan backed by fractional gold. Do you think we're going to see some sort of Bretton Woods system with the IMF and the WHO, that we're going to get back to some sort of like global single currency?
I'd let somebody else do that one, because, like I say, it's beyond me.
Who wants it?
I tell you what I will say. I think there's another element to this as well. This whole question about, you know, gold and its perception, and crypto and its perception, and it's a generational thing. Because I quite frankly, I'm not comfortable with crypto. It's because I don't really understand it terribly well. Yeah. You know, I hear people say that it'll be fine. It'll become mainstream once it's properly regulated. But, you know, regulating something that, you know, as Colin was saying, you can't physically hold on to, and which there can be somebody out there who's slightly more clever than the person who's put the algorithm together, and he can steal your virtual currency. You know, that is a concern. But having said that, I talk to my kids and their friends and things, and they think crypto is, you know, they don't have an issue with crypto. And I talk to them about the risks and things associated with it, and they sort of shrug them off. So you know, there's that to consider as well. I mean, it is complicated. I don't know what the answer is.
I'm happy to come in on the kind of economics in a moment, but I'm glad we've raised cryptocurrencies. I think there's only three things certain in life: death, taxes, and that there will be a massive correction in cryptocurrencies within the next 3 to 5 years, which I think will be very helpful for gold. But I think crypto has a number of fundamental issues with it. You know,
I always say, Shaun, sorry, I'm not going to, I'm sorry for interrupting, but it's like the king's new clothes.
Oh, exactly. But also, I think the regulatory issues with it, you've already seen Russia and China want to stamp it out because it reduces control on their currency. But then you also see the negative impacts in the Western economies around cybercrime and those elements. But more fundamental than that also is the environmental harm. Yeah, the algorithms, and if what I've read is true, and I'm not an expert on it, but that something like Bitcoin consumes about the same amount of power as Brazil.
Yeah.
How is that, in a world where we talk about carbon and the environment, how can you have a scenario where you are running computers for virtually no purpose?
Yeah.
To sustain this. But if we jump off that for a moment, but I do think that is just a waiting bonanza for gold holders. Yeah, I think, you know, going back to a gold standard currency is, you know, highly unlikely, or you know, beyond that. currencies are here to stay. They provide governments flexibility. They allow them to set monetary policy, to stabilise markets. I think actually they are very helpful. But what you do see with them is, we've driven up debts across the world, and China's government debt is just as eye-watering as the US or anywhere else, and Japan's, I think, the biggest in the world. So you can name the three largest economies in the world there, and they all have eye-watering levels of debt. So historically, the way to deal with high levels of debt is inflation. And so fundamentally, at some stage, the world has to allow inflation. And when that happens, gold is a good store of value through. It's a good hedge on inflation. But at some stage, you see interest rates rise, and was it Colin who mentioned 18% interest rates, which I'm also old enough to remember, although I think I was a depositor back then, which was good. But it is that is inflation. Now, I'm not saying we're going there anytime soon, but it is it's a really interesting piece, that the way to manage these extraordinarily high levels of debt, and COVID's only run that up. Governments around the world have taken these emergency responses, and I'm sure a lot of people applaud that in terms of protecting the citizenry. But all that's done is pushed universally government debt to record numbers, and ultimately inflation is really the way that needs to be repaid.
Yeah. I mean, I don't know if you can see the screen, but I've just brought up the US debt clock. I urge you to go on there if you ever get a chance, just type in world debt clock, and you can see each country's national debt, and you've got the GDP and debt per citizen there, and you can see the US national debt standing around about 30 trillion, debt per citizen at 90,000, and the debt per taxpayer at 239,000. And it's just scary. The GDP debt to GDP ratio is now at 124%, which is frankly eye-watering.
It's gone up another $500,000, I think, just while you've been speaking.
100%.
And if ever you're wondering whether you should buy gold, visit this website.
Yeah. But
invest in GGP.
The interesting thing is there is two ways for the world, if you like, to really bring in inflation, in my view. And one is, yes, prices in general are going to go up, but we have to understand that the world economy works around the US dollar. I would buy gold in US dollars. I will buy copper in US dollars. This is the price that we're all talking about. So there's two ways. Yes, we're going to have inflation, and then we're going to have a reduction of the US dollar in value. It has to come, because if the US dollar actually is reduced in value, then effectively we're going to be in a situation where, their debt is no longer as big a problem as it currently is, and that's how the economies are going to have to work. So that should in essence mean that if you buy gold in pounds or euros, though they're going to deflate as well, I'm sure, but maybe not as much as the US dollar, then you're also going to get a bonanza from the fact that the US dollar will decrease in its value. In my view, that's my view. What do you think?
Whilst I concur, I'm concurring on a short-term basis, but the dynamics and the way we go forward, I think, I've sort of entered this debate on to subscribe to something futuristic, and I lots of things could happen in the short term: Ukraine's, Taiwan's, inflations, and oil, and and things getting out of kilter, ports blocked up. But I think this debate is really futuristic, and what our shareholders and what the investor population thinks about the various commodities. And so back to gold and its relationship to all the other things, and will it still be play a major role? I've got to maintain my stance. I really don't know, but the short-term debate has been going on as long as I've been in this mining space, and I think the fundamentals have got to change rapidly. And I think it was Phil says, or no, I think it was Shaun said, I could never see us going back to a gold standard because that's ultra simplistic. I think there's going to be a change which either works for gold or doesn't. And for the life of me, I can't see it being Bitcoins because I feel so nervous about those, but that could be an age thing. What you're saying there, Kevin, in the short term has to be good. And if the short term fundamentals hold up, yes, then gold could look forward to a pleasant improvement and stay there for a while. But I do see, along with the rest of the fundamentals, I do see a changing world which will reposition gold, maybe position cryptocurrencies, might lead to a single currency, and beyond my projection ability, I'm afraid.
I think we've talked about the role of gold in the economy, but I'm a huge believer in the US economy. It has driven innovation. It has relatively very positive demographic. You look, it's the world's largest economy. So look, when we talk about this, I think it's useful to put it in context. I think gold plays a role in being part of a well-diversified portfolio. I think I think people should have a lot of confidence. The financial capacity of governments to manage, and I think the global financial crisis, COVID, have all been great examples of the ability of governments to manage economies through very difficult times and then come out in a relatively positive way. Now, we've talked about high debt levels and all the rest, but fundamentally those are not eroding confidence, and that means that fundamentally the governments have done a good job. So I think we've got to put this into context, but having a balanced portfolio with gold I think is equally sensible.
There's some great responses, great answers there from the panel. I suppose I've got one other question is that I'd say the majority of the companies you represent are undervalued, massively undervalued. Looking at some of the resources there. When do you think we're going to see the real value come back? I mean, to use a term that Colin uses a lot, the day of the small miner. When do you think the small miner is really going to be appreciated? Do you think we're going to see a sea change in the attitude to them?
Just by pure definition, but by pure requirement. I mean, if you're chairman of a massive mining company now, it doesn't really matter which metals you're involved in, but let's say copper is one of the dominant ones, produced excellent results. You post 2008, you retrenched stacks of people. If they weren't productive, they were out the door pretty fast. Your cost base was very, very well rationalized and very, very effective. Windfall profits in 2014, 2015, I think it was. And now all the analysts are looking at the inventory and it looks bleak. They have not got sustainable businesses. So the small miner will come back, has to come back. And a lot of us are putting small mines together now. In any case, the big question, I think, Phil, will be, and I don't mind mentioning them really, the BHPs, the Rios of this world, I can't see them buying a conglomerate of small mines. So I think they will persist on their mission of buying up whatever big mines are available. The grades will get even lower than 0.62. And I think that companies who are able to access the resource skills of people who can operate small mines from a mining point of view and a metallurgical point of view, they will basically emerge quite strongly. And because the majors are not back in exploration anymore, only in the form of joint venture money, I do feel that the new balanced, smart junior will have a combination of some production, not massive, some production, together with big explorations and small exploration projects. So I see that by definition, what's happened over the 25 years, the majors would have to make such a big U-turn that it's just not going to happen. They're not going to get involved. But our future at our level, small and medium cap, is great. In as much as if we can combine small scale production with big scale exploration, we're providing a platform to address the imbalance between supply and demand, which I think we've all agreed in this discussion is growing and is going to grow even more. So the day of the small miner is back, imminent and happening. That's my answer.
Yes, I think indeed the small miners can look forward to tremendous opportunity. But there are different aspects of small mining. There's the miners which are solely involved in exploration. There are those, much fewer perhaps, who are solely involved in perhaps relatively small or medium-sized production. And then there's this intermediate phase, which my own company in Conroy Gold is going through, in which you've been involved in exploration, and then you come to a stage in which you've made a very major find, and you're now really in a totally new bracket. And how it will go is obviously very difficult to see. It's almost certainly going to be very positive, but how positive, that's hard to tell, or the time that it will take. We've seen before a situation when one was with a company that was made the zinc discoveries, in which one was in the usual small exploration situation, made a major discovery. And when share price moved a little bit, but not all that much for quite a while, and then began to move upwards and went up a great deal. Now, whether that will happen in present circumstances, one can't tell. But I think the overall picture for small companies, because of the demand, because of the various things which the various speakers have indicated, I think it's a very promising outlook for small companies in the mining industry.
Yeah, I just on that note, Richard, I would like to have discovered gold mine next week. You know, what was it 13% zinc?
Yes, some very nice zinc in it indeed.
I think there's a huge opportunity. I mean, apart from anything else, the sort of the 100 to 200,000 ton copper range type company, you've got shorter lead times to production. You're more flexible in terms of your ability to react, to market conditions and contracts and your production schedules and things. So I think people will latch onto that as well. The other thing that seems to me to be the case is, if I cast my mind back 20 or 30 odd years, I could give you a long list of jurisdictions where I'd be more than happy to go and work. That list now is significantly smaller, very, very much so. So I think for the junior, there is a lot more competition in a very much smaller pool in terms of jurisdictions. And the guys that have got in there and have picked up licenses and picked up ground in the last couple of years, I think they are going to be in the prime spot.
Yeah.
Because you've got two choices. You either go somewhere where you're going to have to, duck and dive and keep your head down, or you're somewhere which is a decent jurisdiction where you can do business.
Yeah, I mean, I think it's quite telling, really, that all the panel here are in some way involved with a major. Obviously, your Jubilee involved with you. Obviously, Conroy, Professor Conroy's got Demir Export involved. Colin's involved with, you've got Anglo, you've got First Quantum, you've got Sandfire's option agreements, and then obviously to a larger extent you've got Shaun with Newcrest there. And yeah, what are your thoughts on it, Shaun? I mean, it's probably a bit insulting to refer to you at sort of 500, 600 million market cap, been into the billion market cap as a small miner, but obviously you did start off as a very much a junior explorer, and then found a partner with Newcrest.
Look, thanks, Phil. I just think it's part of having a wonderfully vibrant sector is you have this, diversification. You have the majors which are able, be that a BHP, a Rio, a Newmont of this world, that when there are big, often low-grade discoveries that need to mobilise really significant amounts of capex to have a multi-year development phase, they are able to marshal that capital and support to develop those assets. Conversely, at the other end of the spectrum of producers, you need those that are agile with a low cost structure that can go in and develop smaller, often high grade deposits, but ones that reward the agility and ability to move quickly and not create too much administration cost. Then you go down to the Explorer. I think we all lament to some extent that majors have reduced in a historical sense their exploration or their greenfields exploration. And that's a shame. But equally, I think what you often see is, these smaller groups having smaller footprints, being laser focused on making the most of these areas, being very efficient in their capital and the amount of thought that they put into those processes. The Havron mining lease was once owned by Newcrest. At some point, after decades of being unsuccessful in exploration, and notwithstanding that they have some highly talented people, but they were very focused on running Telfer well. They had a huge footprint. They were looking for massive deposits. At some point, they decided, well, let's actually release all this ground. Let's bring in more innovative, smaller, focused groups, such as a Greatland, to do exploration on smaller parts of that. And as it happens, and testament to the success of that, Greatland did have a discovery, did find another major deposit. And then, of course, there's an opportunity to then work together with that group to then leverage the existing infrastructure of that major, which is kind of the best of both worlds. So, I think it's a wonderfully, vibrant and diverse sector. And I'm a huge believer in competitive advantage. And I think that's what it allows. I think it allows different groups to focus on their competitive advantage.
Thank you very much, gentlemen. The last question, obviously, always on the Sunday roast, is what's on the table on this particular Sunday? We'd like to start with you, Shaun. I think you've been on a midweek, but you haven't been on a Sunday roast. So what's it to be for this Sunday roast?
Barbecue for us, I think. The summer Australian barbecue, probably steak and sausages, if that constitutes a Sunday roast under the rules of engagement here.
All rules are allowed for Sunday roast. You can have an Indian takeaway if you want. It's up to you. Yeah. Colin?
Well, I'll be on the road from Cape Town to Joburg, staying off at Grafferunet, and which is in the middle of the Karoo, so it's going to be a nice piece of lamb for me for sure.
Yeah, okay. You maybe have some. You could have any type of game there. No, I would suggest.
Yeah, but it's world famous is the Karoo for the quality of its lamb.
Ah, okay. I would be with you. What about you, Martyn?
Some of my own homegrown lamb.
Wow, he's got a wee farm on
that. Sounds good.
But we're coming round to you. I'll bring the mint sauce. Okay. And yourself, Richard?
Nice fillet steak, Irish fillet steak, best business in the world.
Yeah. Well done again.
We had this discussion the other day with Phil. You said well done. That means you want it well cooked, yes?
Absolutely.
See, Phil disagreed with me, but Irishman doesn't want to see any blood in his meat. That's not the way it works, okay? You have to understand. And Phil, what are you going to have for your Sunday roast?
That's a good question. I think we're going to go for a nice joint of beef. Got to be a nice joint of beef.
For me, definitely lamb. Roasted in the oven. Try and eat all that crispy skin before anybody else gets it. And we're laughing.
Good. Well, listen, gentlemen. We really appreciate your time and obviously getting everybody together. It's not an easy task to do, but really appreciate everybody for turning up and you're excellent. I think from a listener's point of view, I think we've also learned a lot, and I think that everybody will learn a lot. And I hope that it's been a valuable sort of lesson or exercise for you, gentlemen, as well.
We've enjoyed it.
Thank you very much for the forum. Yeah.
Richard Conroy, Martyn Churchhouse, Colin Bird, and Shaun Day. Thanks very much for your time.
Thank you.
Thanks, guys.
Thanks very much.
Bye.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.